Hello traders, today I'm going to show you what to expect in 2024, how to approach it based on price action, a little bit of forecasting that I'm going to do today, and hopefully this will show you how exactly we should be approaching the upcoming year. And I'm going to give you examples of what happened this past year and last year so you have a good understanding. Now before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. There are risks involved with trading. So right now we're in December. We have a few good weeks left here until 2024, and there are still opportunities. The one thing that I always recommend that we do is add the ATR, and I use the average true range with a setting of 4, and that tells me where we're at as far as volatility, if we have trends in the market, and all that good stuff that is left for another video. Now that I have the ATR here on the chart, I can see that the market is now increasing a little bit in volatility. So we were kind of slow here in November, towards the end of November, and now we're on our way up. That means we're going to have a lot of trending days. So as a little bit of a tidbit on how we look at price action, the more volatility, the more trending markets occur, that means we go for larger profit targets. But really that's not what I'm going to focus here on the video. Today's video is going to be based on forecasting. So when I look at what we're seeing here right now, I have to have an understanding of whether the year is bullish or is not bullish, which means the market may go down, may go sideways. And so one of the ways that a lot of professional traders focus on understanding the forecast for the year is looking at whether or not we have an up month in January, which occurred right over here. And this is how we start off our calculations to understand whether or not we have a bullish year. Starting in January 2023, I have a line, a vertical line. I use this vertical line on the first day of January, the first trading day, and I place another vertical line here on the first trading day of February. So we're looking at the first month, more or less, on how the month of January traded. Now this is a forecast. It's a very strong forecast. It's called the January effect. I've been teaching this for over 20 years to a lot of our students. And this January effect still is one of the highest performing statistics that exists to tell us the type of year, bullish or not bullish, that exists. So I can see that the month of January was an up month. It's very clear. I can see that the starting price is here and the ending price is here. Once we have this information, it doesn't mean that the market's just going to continue to go higher and higher, but it does tell me that at the end of December or towards the end of the year that we're going to have a higher close than where January started. So if I crunch up my chart right over here, and I can show you where we are right now, this is where January started, and this is where we currently are as of today, December 11th. And we can definitely see that there was a bullish run for the year. Now, if you look at the year prior, 2022, we have a different idea, a different situation. You can see that the January 3rd as the first day of the month and February 1st here indicates that the month of January was a down month. So this tells me that we are not going to have a bullish year, or the market's not going to go higher in comparison to where it opened in January. Now it doesn't mean the opposite. It doesn't mean that the market's going to go down. So there's not an inverse relationship. What it does mean, or what it does tell me, is that the market could go up, it could go down, it can go sideways, but we don't have that statistic that the market is going to close higher at the end of the year, and it's really strong. It's a really high performing investment when you see the January effect. Now, if you look at December, this is where and what happened. January started, and this is December. So obviously, the January effect in 2022 for the E-mini S&P was correct. Okay, That's 2 years in a row. What if you say, let's take a look at a third year? Let's go back to 2021. So in 2021, we have very clearly January, just spread out the chart, January to February. Okay, so this is the only information that we have. January started and just slightly closed higher as we get into February. Okay, so February 2nd, this is the result. So now, what do I know about this? Well, the month is a higher close than open. So January closed higher than where it opened. That means the market's going to go higher. And what happened? The market just keeps on going and going and going and never really looked back. Not a lot of opportunities for pullbacks and retracements, which is what I like to use to get into these trades throughout the year. So here is 2022 in comparison to where January 2021 started. So if you're still not convinced, I can show you another market. We'll take a look at the NASDAQ, use the same rules, the exact same ideology that I just showed you on the E-mini S&P 500. Before I show you the NASDAQ, remember to subscribe to the DayTradeToWin YouTube channel. If you like the type of videos on price action and you want to learn more, visit DayTradeToWin.com. We have great programs on scalping, especially the Accelerated Mentorship class, which has all the courses and software in a discounted package. Now let's take a look at the NASDAQ. So right now we have the NASDAQ 2023 looking at the highs of the year. This is where we are right now. Let's take a look at where it started, and I can show you how we could have predicted with pretty good odds based on all of the data that we have starting January here in 2023, looking at another line here in February 2023. What happened? We have an up month. Let me just expand this out. And you can see here that the month of January in the NASDAQ was up. So where does that leave us as traders looking at the rest of the year? Remember, the January effect is a great way to forecast what the year is going to be. And if I scroll back to where we are right now, you can see that the market is at its highs for the year. Again, this is a great example. Let's take a look at last year on the NASDAQ 2022. So in 2022, we have here January, we have here February, and look at that, the NASDAQ had a down month. Now again, it doesn't mean that we're going to have a down year. It doesn't mean that we're going to have a sideways or up year. It just means that predictively, the January effect only with the statistics that we have, if it's an up month, the year will be bullish. So what happened in the NASDAQ 2022? Down, bearish. That's what happened. Market was a complete mess, just kept on going lower and lower. One more year, let's go back to 2021. Here is 2021. I'll put a line, another line there. At January, at February, what do we have? We have slightly higher, right? So it's not a great example, but it is higher. What does that mean? I can expect that the year of 2021 will close higher in December of 2021. You can be an investor. You can get in on every pullback as it returns back up. Part 2 of the video will show you exactly how we do that using a retracement tool. And now we're able to capitalize as the January effect told us that the year will be higher. And it did. It was for 2021. Visit DayTradeToWin and don't forget to subscribe to the YouTube channel if you want to learn more on how the January effect works. Part 2 of the video is coming up later. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the DayTradeToWin YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.